Ladies and gentlemen, let me invite you to quickly take your seats as we take on the next session. As everyone is going back to their seats, I would like to remind you the languages that we are using. English is 4-1, French is 4-2, and Spanish is 4-3. Ladies and gentlemen, welcome back from your coffee break. We now have the pleasure of learning about Rwanda's very own financial inclusion journey through this play that is going to be presented by Mashirika. Enjoy.
Sing a new song. I come to sing a new song. Hey, sing along with me. Sing along with the world. Sing along with me. Sing along with the world. Sing a new song. Oh, sing a new song.
Dear Mutunzi, has anybody seen me? Great. Mutunzi, wait for me. You see, Mutunzi, wait.
Yes,
You see, my son is very sick. Can you please lend me a little bit of this money so that I can solve some medical bills?
Why not?
Great. Thank you very much.
I wanted to talk to you.
Margarita, you talk to me later, please. Next.
Yes, dear Mutunzi, your friend, my husband.
Has been sick for a week now, give money for this, give money for that.
Yes.
Papa, you have wasted enough money. Please, let's go.
Is it your money to call it wasted? I am Mutunzi, the son of Mutunzi II, who was very wealthy throughout his life. I grew up in money. My grandfather understood money. Everybody in my family understood money.
Money.
Do you understand money?
Money.
Do you understand wasting money?
Money. Money. You see, Mutunzi really understands money. Stories are told of how his grandfather used to call kids in the village to come watch over his money as it dries on the sun.
Oh, yes, before returning it to secret places in his house.
So when he says he understands money, he really knows it by blood.
But does he?
My father has big money, but he'll lose it in a hurry.
You see, my father thinks he has big money, but he has no idea of the standards out here. Mon père pense qu'il a de l'argent, mais il n'a aucune idée où va son argent. Quel est le point d'avoir cet argent si vous ne pouvez y gagner des intérêts? Quel est le point d'avoir cet argent si vous et votre propre famille n'êtes pas assurés? What is big money if your properties are always at risk? I mean, what is your plan for rainy days? What if you lose this money today as you wait to be fit, to get back on your feet? Will you have that crucial money? I mean, big money or small money. Don't make the same bad choices. Like my father who thinks he has big money.
He'll lose it in a hurry. Clarice comes home with a vision for a change. Time then for all. Her new abounding in the street.
Just to let everybody in this room understand that Clarice is eventually a banker now.
Who knows? Maybe getting into a financial system would enable Mutunzi's family to make better financial decisions, save for rainy days, buy insurance, and retire with dignity, actually being rich as per Mutunzi's dreams.
But you see, with a father of his own stubbornness that has tried and tested all the traditional methods, this was not going to be easy at all.
Clarice? Clarice? Clarice?
Yes, Papa.
Clarice, how many times have I called you?
3, Papa.
1, 2, 3. 3 good times. Clarice, why are you doing this to me?
What have I done, Papa?
Why do you want to change the way I do things in this house? The way I've always done things in this house. Now, listen. Tell your mother not to take even a single coin in those so-called financial institutions. Margarita,
No, Papa, please.
come and listen to your daughter.
No, Mama, please stay there. Papa, no, she has nothing to listen about. I mean, we have already decided. If you want to continue storing your money in the closet as you always have, please go ahead. But let Mom take advantage of living in the modern world. I mean, it is the right thing to do. Please let her save her little hard-earned money safely in the bank. I beg you.
I beg you. Decided as who? Clarice, decided as who? Clarice, do you want me to regret why I took you to school?
But Papa, you took me to school so I can come back and cause a change.
A change?
Yes, Papa,
A change?
a change.
What change? Clarice, I don't want your change. Actually, if you really don't know, let me tell you. Keeping money in financial institutions is just opening ourselves to losses. Why do people want to enter into my financial status? Eh? Let me ask you. How will they differentiate my money and the other money by those people kept in there? Hey,
Papa, s'il te plaît, ouvre tes yeux, je t'en supplie. You think you have lots of money, but you don't.
don't you see that this is a clever way they want to steal
Papa,
from us?
No, I mean, Papa, please listen to me. Going to school exposed me to people, to see what people can do when they join financial institutions. Can't you just understand that, please?
Mutunzi. Eh? Clarice says she has seen big businesses that people put out using business loans. Beautiful homes that were built on mortgages. People avoid near-death situation due to medical because they have health insurance. Agriculture insurance. Eh? Compensate people for their crops that were wiped out by the floods. Don't you get it?
Papa, I promise these things work.
Yes.
Financial inclusion.
Financial inclusion is being able to have access to goods, financial institutions, and money that respond to your needs.
You see, let's talk about loans. Not just using your own money, but being able to tap into a bigger fund with no risk.
Being able to exchange money with minimal risk.
Minimal risk, but what is not risky in this world? Living itself is a risk.
Financial inclusion is being able to save, borrow in a more responsible and sustainable way.
And you see, this is not just about banking, insurance, microfinances, SACCO, mobile money. All this is part of this big idea and big concept of financial inclusion.
That is financial inclusion.
Marguerite and Clarice needs to work hard towards understanding me, Mutunzi. Just the way I understood them. They are wrong. 1, 2, 3. 3 good generations of wealth down the line, and they expect me to be that horse that cannot even take control over its own money. Now my daughter is saying I'm not rich. Of course I'm rich. Ha! Of course I'm rich. Hey, even in the old times during the Belgian days, you'd give a cow and they give you land. But now imagine if that cow got lost. After completing all those transactions, do you imagine the amount of pain you would carry seeing that buyer who has your land sitting comfortably in your land, and you are running hills and mountains lamenting on your lost cow? Now they have introduced cash. My only dear cash, they want me to give it away? No. What if what they are saying is true anyway? Maybe I can. No. I will think about it later. Clarice.
Yes, Papa.
Please put water for me in the bathroom so I bathe and go join my friends.
Papa, I was just checking. Water was cut off.
Cut off?
Yes, cut off.
Okay. If it's cut off, switch on the TV for me. I will sit and watch in the meantime.
It was also cut off.
Okay, then bring my newspaper. I will read that. And please switch on the light so that I can see clearly. And don't dare tell me that electricity is cut off.
Papa, electricity was also cut off.
What do you mean cut off? Hey, everything is cut off.
Yes, everything is cut off.
My gosh. Clarice, what is the day today?
We are Saturday.
Oh my goodness, at such a time. On a Saturday?
I told you, Papa.
Okay, who will help us? Who can help fix this?
You always have a solution. Let's see what you will do this time.
Faced with these silent nights, Mutunzi had no other choice but to sit down and listen to the ladies of the house.
Actually, there's been an advert on TV.
Yes. So now you can complete all of your transactions and pay for all of your bills using mobile money and mobile banking. at your hand, no cash, no fee, and it's just simple.
Papa, you know these days financial services are actually on our fingertips. I've been using these mobile money services, and even though I don't have any money on my mobile account, I can actually borrow from my bank and pay all these fees standing right here in front of you. And that's the power of electronic banking. Let me show you if you want to.
Wait,
come.
you're going to see how Mutunzi is going to be excited when he realizes he can actually pay for electricity without moving a foot.
Ta-da!
Hey!
Yes.
Hey!
He understands
Bye,
money.
bye.
Yes,
With
put this
wisdom.
by.
Just like that?
Just like that.
And
Let me show
pass
you.
it
Come.
down to the
And now the TV is on. Just like that. Let me show you over there also. And now, water. Just like that. Simple as bonjour.
He
That's it.
understands money. With wisdom.
Now,
Pass it down to the generation.
Mutunzi is going to enjoy taking his shower without walking to offices to pay for his bills. Because this is easy and very accessible.
Convenient wherever you are and whatever time of the day or night.
Tell me one good reason one should not be included in such a system.
Exactly.
We are in
Wait a minute. I'm now a new man, financially included. Oh, hey, Clarice. Oh, this
Mutunzi.
is wonderful.
Mutunzi.
Yes.
Excuse me. Again, you remember my son, the one we sent to the hospital? He's back from school because
Oh,
of
yeah,
school
because
fees.
of school fees. I
Yes.
understand. Okay, my dear friend, don't worry. Today, I'll give you what I can.
Please.
But please, tomorrow, just go and open up an account in the nearest bank or circle. And remember, please, start saving your money slowly by slowly. This is why financial institutions exist.
You're becoming wise.
Yes, let me tell you. That's why that's why they exist, to make our lives easier.
Hey.
Actually, Margarita, oh, come here, sweet darling. Come here. Come here, sweet darling. And please, Clarice, come. I'm really terribly so sorry, my dear wife. I'm really so sorry. I misunderstood you before. Clarice, can you teach me much more of this so that I can also teach my co-workers and my friends? Nobody should be left behind, lagging behind.
Yeah, sure.
You see, and actually what I've come to understand, if this thing is used very well, if the system, everybody uses the system very well, you know, this one will just transform the lives of our community.
Imagine the possibilities, right?
Yes.
If everyone here could gather and we ask for a bigger loan, you see?
Yes.
Our farm can start supplying milk in Kigali or even the whole of Rwanda. We can be the next big thing.
Yes.
I told you.
What is inclusion if it's not shared?
Exactly.
Let's change things.
Everybody.
Let's make a change.
Okay.
Yes, let's make a change.
Change.
This is a change. A better change. This is a change. A better change. This is a change. A better change. This is a change. A better change. This is a change.
Can anybody tell these people what change we're talking about?
Financial inclusion.
Another round of applause for Mashirika. Thank you very much, Mashirika. At this point in time, I would like to invite our theme sitter, Dr. Monique Sanzabaganwa, who is the Deputy Governor of the National Bank of Rwanda, to come forward for her presentation.
morning. Do you have the presentation up? I think I need help. I need support. It's coming, eh? Okay. Good morning, everyone. While waiting for the presentation, the slides to be up, I think I should thank you for taking the time to listen to our story. Like Clarice has exemplified, this is the Rwanda of today. But do you know why we are so excited about financial inclusion? Maybe you know, but my answer is the small word, inclusion in that phrase. And in Rwanda, inclusion actually means a lot, because in our recent past, we experienced the hard way what exclusion can cost a nation. As you may all know, in 1994, this country was struck by the genocide against the Tutsi. It's talked of as the last genocide of the 20th century. We had a situation where, because of exclusive policies, this political dispensation putting forward hatred and divisions and bad governance, made a part of Rwandans kill another part of Rwandans. More than 1 million Tutsi perished. Half of the economy was lost. And we really almost got to the state of a failed state until the liberation struggle came to the rescue of Rwanda under the leadership of our president, His Excellency Paul Kagame. From there, a government of national unity was formed. By the way, he even relinquished the presidency, or to be at the head of that government, and could only, upon insisting from the leaders, take the position of vice president. So this is what leadership can make to really build a nation. And our president keeps saying that actually this country, Rwanda Inc., which is run as a company, like many people like to say, you can't really be seriously talking about development if we exclude 52% of its resources, who are women. So when we talk of financial inclusion, actually it takes roots from that vision, that ideology that's clearly understood that without everyone on board, actually what you build cannot be sustainable if it stands up at all. So our journey, I can put it in 5 phases. if you will, there is a sixth phase which we are entering into. I will only touch on that in my concluding remarks. I think that I have spoken to the pre-1994 period and fairly the period after the genocide, because definitely the genocide against Tutsi has defined our history. It's a key marker in our history that everything else refers to it naturally. So if I could just talk a little bit about our journey starting right after the genocide. That was an emergency period for us, whereby government was busy rebuilding everything from scratch. Not only the infrastructure, but mainly the human capital, the social fabric, bringing back cohesion, unity and reconciliation, because you can't talk of sustainable development if you ignored the wounds and the legacy of the divisions that we had lived in for decades. That's a period where stabilization policies were put in place. As you remember, that was a period of globally, really, the global community putting poverty reduction at the core of discussions and policies. So the poverty reduction strategies were implemented, and so on and so forth. Rwanda took deliberately a decision to liberalize and open the capital account. That formed the basis for a robust financial sector development process. But what I can mention about that period is the birth of Vision 2020. This roadmap was powerful for us. It built on that vision of becoming one nation and also an inclusive one that is putting knowledge first, looking at technology and private sector to really form key pillars of development. Of course, there has gender inclusion of women as one of the cross-cutting pillars. Now I can go deeper into the three remaining phases, one being rebuilding the financial sector. This period was characterized by a lot of reforms. That's the period where, for instance, we had our Vision 2020 implemented. We had financial sector development program put in place. We had key laws and the regulations, including the very central bank law, banking law, and the first microfinance law put in place. And we had also some key infrastructure, initial ones established. So this period was really focusing on creating the foundation for a strong financial sector. A lot of reforms went into play, as I mentioned, and one of which I could mention was about evidence policy making. This was something that seriously government embarked on. I remember in 2008, we had the first FinScope, and it measured how we fared about financial inclusion. And what got out of that survey really triggered a lot of change in the financial inclusion landscape we're seeing today. Those are the results we got in 2008. They were deeply shocking for us. But what was the most striking for us was there could be almost 100% match when we overlapped the map of financial inclusion, the map of poverty, and the map of local administration entities where you didn't have a single financial institution. The match was perfect. I remember at that time we have 56 poverty level. 52% of our geographical administration, local administration did not have a single financial institution, and financial exclusion was at 52%. That match was struck, it was disturbing. I remember we were sitting in a parliamentarian building whereby the President of the Republic, His Excellency Paul Kagame, was chairing what we call the national dialogue, Omushyikirano. And the then governor presented these statistics. He presented the maps. He overlapped them, and everyone was clear about the message. And there, at that very moment, a decision was taken to create the Umurenge Sacco program, which started 2009. And actually, we got an award from AFI because of that program, which managed actually to close the gap in terms of inclusion, whereby you had like more than 90% of Rwandans really living in a radius of less than 5 kilometers from formal financial inclusion. And that really was a game changer for financial inclusion in Rwanda. But not only that was the focus. These institutions, 416, were established in each of the 416 administrative sectors. But also we could see other efforts in embracing digital. That's the time where we were doing business reforms and many laws that were going to enable for digital financial services to flourish. Unlike in 2008, this time in 2012, we got another FinScope number 2, second version or second generation. And this time we made sure we measured the gender gap, unlike 2008. The gender gap was big, really very big, 15%. That's a gender gap on formal financial inclusion, which, however, had really managed to make a big jump from 42 to 72 formal financial inclusion. And in 2012, we could really see exclusion reduced from 52 to 28%. And as I said, Umurenge Saccos were the main driving force behind the change we saw. From there, we embarked on a journey to deepening financial inclusion even more. We realized that, yes, more and more Rwandans are being included, but we wondered, how are they included? What usage of the products, and what this is making in their lives. So we started really focusing and deepening, being our legal and regulatory frameworks or the policy strategies. There is one policy change that I would like to highlight. and this is the land registration. The reason I want to highlight it is because it was again another game changer, especially when we talk of gender and women's financial inclusion. This is a system that is digital, whereby all the land properties are registered. And in Rwanda, the last numbers we have, 58% of women own land in terms of shared ownership. We have a system whereby if you're married, you own 50% and your spouse owns also 50% of that land asset. We also have 24% of the lands where women-headed families own those lands in their own right, while land that belong to male only is 14%. During that period, what I want to highlight also is the diversification of products, which came as a result of the policy framework that had been put in place and the response from the private sector, both banking, MNOs, and other segments of the financial sector. Again, we measured the progress 4 years later. And the progress was even greater. Financial inclusion had jumped to 89%. The gender gap had reduced from 15 to 11. That is the gender gap on formal financial inclusion. While the gender gap, when we include the savings groups and other forms of informal inclusion, was only 4%. As you can see, the bank kept really moderate at 26%. I think we'll have a banker on the panel that is going to follow. You ask her that question. What can we do on this? What we saw as the key driver of that change was less than digital financial services. But of course, SACCOs continued to play a role, but really the big chunk was made thanks to the digital financial services. Going deeper into understanding this gap, that has been closing, like you can see. We attribute that to many things. One really being, maybe probably not mentioned under policies there, really being the fruits of this inclusive political dispensation, inclusive governance, where women are really taking center stage and taking also positions in different leadership positions. And we have a gender monitoring office actually that is checking, keeping everyone checked, including the private sector. So really that push is making everyone aware of the closing of the gap. But also we have seen these mobile payment systems also closing the gap, the SACCOs playing a role, government programs like poverty and social welfare programs like VUP, and again, the savings groups. The gender gap is still there, as we mentioned, but looking at that graph, we can see that there are low-hanging fruits, like in the social lending by the saving groups, which are dominated by women at 80%. That's why we embarked on a program to map these savings groups, digitize them, and now in talks with financial institutions with the help of our fintech companies, development partners, NGOs, Access to Finance Rwanda, and others joining in that effort to create linkages. And as some of us have seen during the tour, one of the fintech was showcasing what they have done in this regard. In 2017, we made Maya commitments, of course. We made sure that gender gap efforts, we put us there, out there so that you can keep us checked. We are having another FinScope actually ongoing currently, and data is going to be released in the first quarter of 2020. So I'm just hoping that we shall have delivered on our Maya commitments, especially on the closing of the gender gap. The journey continues. What we've been doing recently is about really promoting innovative products in partnership with the stakeholders, especially in the private sector. We have seen microinsurance coming on board. We have seen alternative sources like long-term saving schemes, investment trusts, and private pension schemes also joining the formal financial institutions. We've even seen government really seriously working on an investment insurance to promote the agriculture sector. And with all that, we hope that we shall really have made progress by the time we measure again next year. Going forward, we are now entering a new phase, from deepening to now broadening and resilience. We are asking ourselves the question that access is not enough, usage maybe, but so what? I think this is the time, like Alfred was telling us yesterday, to really think about the so what, the question of transformation that is happening because of financial inclusion. So that's what we are planning to do. We have our new financial inclusion strategy that is being tabled for cabinet consideration soon. And those are some of the key commitments we are making there, including closing the gender gap to 2% in 2024, and also youth inclusion to 70% thanks to the digital financial services. I think I should stop here and let the discussion continue about what all these efforts are delivering for the people. Thank you so much.
Thank you very much, Dr. Monique Sazawaganwa. At this point, we'd like to play a video on financial inclusion, on the financial inclusion journey of Rwanda. I hope it's ready.
Rwanda, the land of 1,000 hills, is located in East Africa with a size of 26,338 square kilometers and a population of about 12.7 million people. The country's economy has been performing very well with an average GDP growth of 8.6% by 2018.
Financial inclusion is a key channel for sustainable and inclusive development. So if you really want to develop your population, the best thing is for them to have access to financial services.
Jean, a mother of 4 in her 40s, runs a poultry farm with over 700 chickens, rears cows, and grows cash crops. Her children go to good schools, eat well, and live a decent life. All this began 8 years ago when she struggled with small investments from microloans acquired from a village savings group before she dared to apply for a bigger loan of 1 million francs from ASACO. This was after several attempts to secure her husband's blessings. Rwanda.
While we're experiencing technical issues, I would just like to invite Mr. Kenneth Agutamba, who is the Chief Strategist of Impact Communication Strategies. He's going to lead us in a panel discussion, then this video will come back later. Welcome, Kenneth.
Okay. Thank you very much, and it's an honor to be here with you from the time we started. And my business here is really very brief. We're going to put the icing on the cake after we heard from Ashirika and the Deputy Governor who just took us through the journey. So I'm going to be inviting a very distinguished panel composed of thought leaders on the subject of financial inclusion to join me in putting the icing on the cake of Rwanda's journey to financial inclusion. With me, we're going to be joined by the Honorable Governor of the Central Bank of Rwanda, Honorable John Rwangombwa. Please join us. And we'll also be joined by Dr. Diane Karusisi, who is the Deputy Chairperson of the Rwanda Bankers Association, but also the CEO of BK Group, and that's the holding company for Bank of Kigali, which is also the largest commercial bank in Rwanda. Dr. Diane Karusisi. And we have Ms. Waringa Kibe, who is the Country Director, Access to Finance, Rwanda. And finally, the Honorable Rosemary Mbabazi, the Minister of Youth, the Republic of Rwanda. Great. I'm not sure we were very inclusive when it came to using the time, so we're going to be quite brief here. And we just hit the point. And I want to start with the Honorable Governor. Everything we've seen from the Deputy Governor's presentation and what we saw in the play, it's been quite a journey, quite a story. And we're lucky because you're one of those that have been right on this journey from the beginning, you know, setting the journey and you know, making sure that things work. But we can't say that Rwanda has achieved total financial inclusion. That's by no means the case. But just like we've seen, we've registered a number of milestones that are worth celebrating. So for the delegates in this room seeking to replicate aspects of Rwanda's journey in their respective countries, what would you recommend as the best practices, and what are some of the black spots that they need to watch out as they set out on their journeys in their respective countries?
Yeah, thank you. Can you hear me? Yes, thank you, Kenneth. Good to be here with the distinguished panelists here and thank the Honourable Minister and the other members of the panel for accepting to be here to share the experience on the journey of financial inclusion in Rwanda. So the question of us, as you said, we are not doing well with time, so I'll be really brief. What could define the few successes we've had in closing the financial inclusion gap in Rwanda? I think one, as you saw, it starts from basing policy decisions on facts. So when you look at as the journey was being presented, you see at different stages a survey is done. Based on the outcome of this survey, decisions are taken. So I think that's very important. It's very important that any meaningful policy decision should be based on numbers, on facts on the ground. Number two, I think, linked to our history that was again presented by Monique, we faced challenges and we committed ourselves straight from the top leadership of this country to try whatever solution we think can work to change the lives of our population. So we are a country or government that is ready to test any new idea, and that has helped a lot to achieve results. Like when the 208 survey was done, as shown in the presentation, I think there are mainly 4 issues identified causing the financial exclusion. One was on the distance between financial institutions and the population. So many banks, we only had banks then with branches far away from the population. The other was, of course, education, financial literacy, the cost of accessing these financial services, but also the level of income of the population. So to cut the issue of access in terms of the vicinity of the financial institutions, government started with the circle, as said. This was completely new, it was homegrown solution, but government was ready to put in money and support the population to organize themselves into cooperatives, savings and credit cooperatives. And government had handheld the cooperatives for, I think, about 4 years, paying for their workers, giving them space. And so the fact that government was ready to invest in this without really learning it from anywhere else made a big difference. And so I'm using this as just one example. Another one linked to this is what we call, again was said, what we call the VUP, Vision 2020 Murenge. This was copied from the Millennium Development Goals that had millennium villages that were supporting populations to improve on their lives. So government introduced this VUP, which is a social protection program that focuses on the very poor within our population, and so supposed to really create some income-generating projects around these poor people. So this also helped to improve on the revenues of the very lowest part of our population. And these two can also be linked to the policy, to government decision that any planning is really built around the population. So it's grassroots-based planning that has helped to improve the inclusion and many other things that we've been able to achieve. Then the other, of course, was we've been getting support from partners, which we appreciate. Different development partners. Here we have Walinga, one of the partners that's supporting us in driving financial inclusion in our country. But I think many of you have partners as well, but the key point in the Rwandan experience is, while we have partners, we own our development program as a country. And that helps to really direct resources and ensure optimal use of these resources we are getting from our partners. So I think that's another key point that also helps to really focus and guide our partners to areas that can have a big impact on the population. Of course, as a regulator, it would be unfair if I didn't mention the fact that we also committed to create an enabling environment in terms of the regulatory framework we put outside there. As you saw, IT technology is making a big difference today, and we had to be bold enough to allow new technologies, new ideas to come on board, and so we put in regulation that really avoids any disruption that could create the instability into the financial sector. But again, we make sure that we don't stifle innovation. And we've had many, many innovative projects coming on board that are supporting and really helping us to improve our financial inclusion. So maybe let me stop here for now. I know we're not doing well with time, so I'll add on some points if we still have time. Thank you.
Thank you very much. And I hope that is quite insightful for some of you who would like to replicate some of the aspects from here in your respective countries. I want to shift to the Honorable Minister of Youth. You represent a constituency that, from the numbers we've seen, has the largest number of people who are not yet included, especially in formal financial services. And the conversation here, as you've noted, is themed around how we can leverage technological innovations to include more youth and women. I want to hear from you, what else would you like to see for us to see that more youth are included financially? And from a policy perspective, especially building into what the Honorable Governor just said, what can you as policymakers do to actually help these journeys of financial inclusion?
AFI for organizing this great event, especially with the governor, the central bank, for the great work you've done. Can you give yourself a round of applause? Like they really mentioned, it's true. Our population, not only in Rwanda, but generally in Africa, the youngest population is the biggest number of the population that we have on the continent. But in particular in Rwanda, we have more young people that are growing up. I think the statistics were mentioned very early in the morning when we're starting. Everyone was talking about the numbers. And if you look at in Rwanda in particular, 77% of our youth are in the rural areas. So it means whatever we're doing, we should be thinking about how do we make these products rural-based. Another statistic that I wanted to mention is also 77% of the youth are in economic activities. So meaning they're also bankable. And I think you can invest in the young people who were here before. Were they not exciting? The young people that were here today who are speaking about financial literacy. Also, but the alarming numbers that we want to also talk about probably is 24% are formally banked. So this is a big problem, despite the fact that the 77% are in rural, 77% are engaged in economic activities, but why 24% are only banked? We know many challenges that the young people have, or their probably even the focus of what AFI could be discussing about, or this meeting in particular, could be looking at what are the challenges that the young people have. A few to mention, you could talk about the lack of collateral or the security for the young people. Every bank is avoiding them that are not bankable because they don't have security. Secondly, the stringent lending criteria, which are complex, the processes are so long, the processes are not youth-friendly. How can we make them more youth-friendly? By understanding their perspective. I like the speaker this morning who gave us an example of the Monopoly game. Did you see how it has changed? You can imagine if you're developing a product for someone who has a different mindset and you think you're going to solve the problem of that person. To get the solution for that person in particular, or developing products for those people in particular, you have to involve them so that you can respond to their specific needs. The other challenge that the young people face all the time, especially from the financial sector, is the lack of trust. This is what they say all the time, no trust, no trust. And we always tell the young people, trust is earned. You have to earn that trust. And what do you do to earn that trust? But it is two-way traffic. You have to trust them, but also they have to be earning that trust that they have to earn. So the industry itself or the sectors themselves, they consider the young people very high risky. So how do we do to de-risk them? What do we do to make sure that the young people are not risky or involve them in the product that they might need in particular? The other one, last but not least, is the lack of basic required savings. So these are most of the challenges that they have, but most of the time, the young people is a reflection of the society. So if the savings are low, meaning even the parents are not doing that, they're not learning from the society, so they're doing what they see in the society, but they can do better because the future is totally different from what their parents went through. So I would say, basically, just in summary of what we think, maybe what we could be thinking about in this discussion to make the young people financially included is probably to create financial products which are tailored to their needs. If you go to the bank, a commercial bank, an MFI, you find a similar product for a minister, for a CEO of companies, from a trader, from agriculturist or farmer. And it is the same expected for the young people. How do we create products that are tailored to their specific needs? Now, in particular, that we have financial DFS, the digital financial services that are in place, where we see most of them, the statistics we saw from the Deputy Governor, about 54% of the young people, we are having a target of 80%. How do we leverage on technology? Because that's where we find them. The other point I was also thinking about that we could consider is leveraging on partnership with the MNOs. If we have many products that the young people are involved in or they are more attracted to, the digital financial services, how do we create an interoperability system that can ensure that if you have an account or the phone, everything will be done on the phone? And the young people are the majority that have these phones. They even know better how to use the phones than us parents or elderly people. I think you saw in the sketch where Clarissa was helping the father because she understood this best. And I think if we partnership can make it really work. Finally, what I would consider is finding the youth. Finding doesn't mean the bank can stand out and all relocate to find where the youth are. But relocating or finding the youth in threefold. The first is proximity. How close are you to the young people? Secondly is the product that you have to develop. The third is the preference. So it's proximity, product, and preference of the young people. Preference in particular, I want to mention that the preference might be they're organizing groups, saving groups. Can we find them there? And see how can really leverage on their organization that is already existing and bring them on board to be banked. In particular, that the banks would be interested in that. How do we find them in tontines or in groups where they organize themselves and save little money? Sometimes they avoid banks, thinking the bank means charges. The bank means more money. If you have more money and you're loaded, that's when you go to the bank. Probably the perception they have to the bank about the bank. So we need to do more financial literacy, education to ensure that we involve the youth and bring them on board. Thank you.
Thank you very much. That was quite passionate. Key take-homes there, we need to de-risk the youth. We need to look at them as the future of business, but also innovating products that talk to the youth and actually appeal to them as opposed to waiting for them to come to us. That kind of, would require a response from a banker typically, and we're happy to have one on the panel. So I'm going to phrase it this way. We've seen the banks quite present in Rwanda's journey to financial inclusion, but we've also seen that in terms of where we have numbers that need to be boosted, it's formal financial inclusion. I just came back from 3 rural districts in Rwanda, and you could hardly see bank presence. So here the question would be, Dr. Diane, from a banker's perspective, and I know you're a disruptive CEO who is trying to use technology to take banking services to people, but what do you think we have not been doing as bankers that we need to be doing moving forward, especially after yesterday's endorsement of the Kigali statement, in moving us forward towards total financial inclusion?
Thank you. Thank you very much, Kenneth, and thank you for having me and in this very distinguished panel. to discuss a very topical issue, not only for us as bankers, but I think for the development of our country. So I think I want to agree with everyone that traditionally commercial banks have not been there in terms of providing services to low-income people and rural people. This is a fact. And I think Dr. Monique has shown it in her presentation. Financial inclusion has greatly increased over the past years, close to 90% today. But when you look at the number of formally banked people, it remains below 30%. So that's a fact that banks have not been there for supporting low-income and rural people. But things are changing, and I want to explain to you how and why things are changing, and even the pace of this change is going to accelerate in the next couple of years. The first thing is that technology is lowering the costs of transaction for banks to reach and provide services to rural people. I think that the governor said it in his remarks. And today, for us bankers, the marginal cost of adding one rural farmer is close to zero. So this is also a fact. We've seen this happening. And we've actually seen that telcos and other service providers have taken an advantage over banks because they are providing these services to people. So that's the first point I want to make. The second is that amidst competition, because our sector is becoming more and more competitive, banks actually going back to the drawing board, looking at what are the criteria for people to choose a financial institution. And I think it was even shown in the small, very nice play that was done by the Mashirika group. People are more and more looking at convenience, accessibility in terms of time. They want to be able to access their accounts and transact quickly. They're also looking at products. They want products that are adequate for their business, for their personal status, etc. And finally, I think one of the most important criteria is quick access to loans, because someone wants to be able to deposit, but also when that person needs money, they want to be quickly able to access loans. So that's why we see most banks now, designing new products, offering many channels for people to access their funds, for people to transact. And we believe that even for the affluent market that we serve, these segments, we need to be competitive in terms of adding to the convenience of people transacting. Now, finally, my last point is that banks are now taking a long-term view. We want to look at the lifetime value of a client. In a country like Rwanda, where give or take 150,000 people, poor people, every year are lifting themselves out of poverty, you see that as an opportunity. You don't want to wait for them to all be in the middle class to start serving them. You want to be there before everyone is targeting them. So we are looking at this as an opportunity, and we want to be able to design the right products for people, irrespective of the segment, irrespective of the income level or income segment, because we believe that these people will give us a bigger value over the long term. We see people, the youth, for example, if you start serving them when they're students, when they become employed or entrepreneurs or business people, they'll stick with you because, you've been serving them from a place where they needed someone. And we want to build this loyalty with the clients and build a long-term, lifetime value for the bank. And finally, I think what I want to say is that going forward, exclusion is going to be a lot about digital exclusion, because many service providers, not only banks today, are providing the services through a phone. We are doing that, but you'll see many healthcare providers, in all services sector, you'll see people providing services over the phone. So in the future, people who will be excluded are people who won't have a device, a phone, people who won't have access to internet, and people who will be digitally illiterate. So I think this is where the discussion will be shifting in the next couple of years, because it's good to have a bank account, but if you can't transact from your phone, then you'll pretty much be excluded. Thank you.
And I believe we already have either one step or both feet into that future that Dr. Diane just talked about. So we need to also work towards digital inclusion to feed into financial inclusion. So we've just heard from a regulator, we've heard from a policy maker, we've heard from a service provider, and now I think it's time to hear from a watcher or a researcher or somebody who stands on the side and watch everything that is happening and tracks it. We saw the numbers, Ms. Waringa, are these numbers reflected on ground from a researcher's perspective? Where are the gaps that we need to fill now that we are embarking on the Kigali Statement across the alliance, across the network? As a researcher, I'm sure your findings would reflect for all these delegates in this room. What can you tell us?
Thank you, Ken. It would be very sad if we were just watching. Let me say a little bit about who we are. We are facilitators of financial sector development in the countries where we work. With Access to Finance Rwanda, but in other countries we are called Financial Sector Deepening Program. So we work with you right there in the middle, whether you're a policymaker, a regulator, a service provider, or the users. So we work with you to catalyze the development of the financial sectors within your countries, and we have development partners that support us. And I want to say that I just have 4 points around this question about some of the learnings we've had here and what people can take back as they go back to their homes. And I think the governor mentioned one of them. The first thing I want to say is data. Once you have data, the ability to follow up on actions because of what the data has said. We've had this privilege in Rwanda to support to support FinScope. So we've been doing all those FinScopes together with the Ministry of Finance and the Central Bank since 2008. And it's commendable that when the data showed people were excluded, then there was an action by government to say, establish circles, and that was done. So that move to use the data and take action around it really is commendable in the context where we live in this country. And that's one of the challenges I would take, that yes, let's continue to use data, to see data, to bring it to our faces, but follow up with a sense of urgency on what do you do, because that's what the data is saying. And I also want to add that one of the things that happened is that even financial education was incorporated in the national curriculum, both primary and secondary, which is quite commendable. Another thing I want to say is a willingness from the policymaker to reform and enact laws and regulations quickly. With our experience working here in Rwanda, you may be amazed that sometimes a change to a law, a change to a regulation can take as little as 6 months. Right from when we start engaging the stakeholders to the time that it is passed. We've seen regulations around microinsurance, shadow banking, like non-banking financial institutions. So that ability to move fast, because if we don't change those regulations, we are hindering actions based on what the data was saying. I think that's quite commendable, and I would encourage that. Another thing is the deliberate effort to engage and convene meetings and discussions with key stakeholders. Because in an age where we are now saying, not in an age, in a time when we are saying we need to increase the depth, we need to increase the breadth of financial services, and it's a digital finance age. We're talking about what is the cost of DFS? It's so expensive. Can we have interoperable systems? Can we stop rolling out agents everywhere? Can we share them? Then we have to have discussions on the table with the regulator, yes, but with the private sector, because unless there's an incentive for me, you will not go forward. What are those incentives that each of the players has that needs to be met? So those kind of discussions that you bring together the stakeholders to agree on an issue so that you move forward, I think has been commendable here, and I think would be something to encourage as you continue in your countries. I'm sure that happens. Another thing I want to just give an example. We were thinking about microinsurance with the insurance sector because it's just 9%. Like many of the African countries, it is low. And just in a meeting with the CEOs, the question is, can you do insurance for the mass market? Can you make your money? So being able to come together, bring examples from other countries, and help the private sector answer those questions is key. So I think I want to encourage that. And the last one I want to say is just the role of measurement and timely feedback. Because you have all this data, you need to have units within our policymakers, the ministries, and the central bank that keeps telling us, yes, we set to do this, this is where we are, and we need to improve on 1, 2, 3. So measurement is something I would want to encourage. Thank you.
Okay. Thank you very much. At the center of her input was the word engagement, and I think we can continue engaging from the highlights of what you've heard from our esteemed panelists. Online, you can continue with the conversation under the hashtag AFI Global. Tag each of the panelists here. Continue with the conversation outside of the room. And unfortunately, we would have loved to hear from the audience, but because of our time resources, I'm going to suggest that I ask the panelists to rejoin the audience so that you directly interact with them, as opposed to you asking questions when they are at a distance. And then also, there's a video we're supposed to watch at the beginning. I think we can use this time to watch it. But for now, I want to thank the esteemed panelists for putting the ice on the cake. You did a great job.
Thank you.
The land of the Southern Hills is located in East Africa with a size of 26,338 square kilometers and a population of about 12.7 million people. The country's economy has been performing very well with an average GDP growth of 8.6% by 2018.
Financial inclusion is a key channel for sustainable and inclusive development. So if you really want to develop your population, the best thing is for them to have access to financial services.
Jeanne, a mother of 4 in her 40s, runs a poultry farm with over 700 chickens, rears cows and grows cash crops. Her children go to good schools, eat well and live a decent life. All this began 8 years ago when she struggled with small investments from microloans acquired from a village savings group before she dared to apply for a bigger loan of 1 million francs from a SACCO. This was after several attempts to secure her husband's blessings.
I told my husband I wanted to do poultry farming. He first declined, saying he might fail. As a mother who woke up at 4 every morning to go to the farm and plow while carrying a baby under the sun, you can do all that and prepare food for the children to eat on time. I wanted more for my family, so I had to convince my husband that joining a SACCO was the best thing to do for us as a family. Today, after joining a SACCO, the difference is noticeable. I have a caring maid that takes care of my children when I'm away. We get milk and the children drink. Yeah, you can see that the problems at home have reduced. I don't have to wait for my husband to come from work to provide.
Jeanne's story mirrors Rwanda's unique journey of financial inclusion. Community savings and credit cooperatives have been a financial inclusion success story. These cooperatives, known as Umurenje SACCOs, have served millions of Rwandans, particularly in the countryside. More than 90% of Rwandans now live within a 5-kilometer radius of a SACCO.
The Finiscope survey of 2008 revealed that only 21% of Rwandan bankable population was accessing formal financial services. The government of Rwanda took action. In that regard, in 2009, the government launched the National Savings Mobilization Strategy with the goal of having at least one SACCO at the sector level.
Teogene A young man in the outskirts of Kigali in Gasabo district is another beneficiary of these SACCOs. Life hit him hard with his single mother as a school dropout. Through borrowing a motorcycle to carry passengers, he was able to save up to 500 Rwanda francs in a village savings group. He later deposited this money in a SACCO to buy his own motorcycle, becoming eligible for a loan even when he did not have collateral. He has since received many more loans and has managed to provide for the family.
I would borrow a motorcycle to get money to buy food. Lucky enough, I managed to save money. And after seeing the progress made by people who had acquired loans from a SACCO, I also applied for a loan to buy a motorcycle. They gave me 1 million Rwandan francs. I paid it off in 1 year and I went for another 1 million Rwandan francs to buy another motorcycle. I was later able to buy a plot and I built a house. SACCOs are my savior. They are the foundation of my success.
These SACCOs have done wonders. Beneficiaries are diverse, but the story of Rwanda's effort to close the gap in financial exclusion is broad. There is no shortage of unique cases. Peter became blind at 8 after suffering from measles. He was left with limited options for his future.
A women's cooperative accepted me as a member. That is how I was ushered into the financial ecosystem. I began with receiving 200,000 Rwandan francs. Now I get up to 6 million Rwandan francs. I have built a company, I run properties, and I manage everything internally. I know how to manage my expenses and revenues like anyone else. Challenges I face are not different from what everyone else would face.
His business has grown to 25 properties and a cyclist cooperative that hires young people to transport goods. The evolution of financial inclusion in Rwanda in recent years has been characterized by disruptive emerging technologies. In 2009, the financial sector saw entry of mobile money technology, flipping over the world of digital payments. This came at a time when government services had been digitized, prompting Rwandans to use digital payments to access services through an e-government portal called Irembo, which was introduced in 2011. It was after 2009 when over 95% of adult Rwandans were issued with electronic national IDs as an enabler of access to digital financial services.
One had to go to the village office first, then to the cell office, then to the sector office. Then they would send him to the bank to pay first. Then he would return with a bank slip, and that is when the executive secretary would provide the service. But today, with just an ID, you pay via mobile money on Irembo, and in less than 10 minutes, you would get the service you requested for.
My name is Kayonga Ketia. I'm a student, at the same time owning a canteen. I was working for someone whereby my salary wasn't enough for me because I was paying for my school fees. So I started saving 50,000 per month on my mobile money account for 6 months to increase my credit rating. So I borrowed 300,000 on my mobile money account because I couldn't get a loan from the bank because I didn't have a collateral. Whenever I want to increase my stock, I borrow from my mobile money account without going to the bank, which is so quick and easy. I started with initial capital of 600,000. So I've been working for 2 years. By now, my business is worth 2 million.
So, where is Rwanda heading to?
The national transformation strategy of the government, in fact, the target we've given ourselves is to reach 100% inclusion by 2024.
If we may give another round of applause to the National Bank of Rwanda for that engaging and captivating video on the journey of financial inclusion in Rwanda. Ladies and gentlemen, thank you for your attention all throughout this morning. At this point in time, we will now hold a high-level ceremony to highlight 3 new highly complementary partnerships that have been formalized this year. Without said, I would like to invite Dr. Alfred Hanning to come forward for this next session. Alongside him, we're inviting Mr. Bastien Betosa, who is the Deputy Head of Division, Financial Systems, Agence Française de Développement, AFD, to join him. Would like to also invite Ms. Natasha Benka, who is the Deputy Head of the Division, German Federal Ministry of Economic Cooperation and Development, BMZ. Alongside them is Her Excellency Joe Lomas, who is the UK High Commissioner to Rwanda and non-resident ambassador to Burundi. And I would also like to invite Mrs. Christina Wedkal, who is the head of mission of the Swedish Embassy, to join them. Thank you.
Yes, good morning again. We here at AFI, of course, we benefit a lot from various inputs from our partners and stakeholders, and many of them are in the room this morning. But this session is particularly dedicated to appreciate the funding partnerships that not only the ones that have just joined us, but of course also to appreciate those who have been with us for a longer time. And we have a slide in front of you where you can actually see who is currently funding an intellectual partner of AFI. And it is maybe important to note once again how AFI was created, which was, I think, way back in 2008, 2009, when the Bill and Melinda Gates Foundation and the German International Corporation, GIZ, together co-founded this project, which then later, as you know, in 2016, became an independent international organization. Along the way, we entered into new partnerships with Flourish, which is, for you, known as the previous or media network. We entered partnerships with others, including with the Canadian government and of course also with the German Ministry for Environment, Nature Conservation and Nuclear Safety, the BMU. But you also see, of course, on this slide, the Federal Ministry for Economic Cooperation and Development, which in fact has been with AFI as well since very early in the process. I think as early as 2009, 2010, the German ministry was engaged with us, and we are very happy that Natasha is here with us today, especially also because we have now entered a new partnership, which is, so to speak, coming now with the second decade of AFI, which is, I think, also opening up new opportunities. This new partnership I'm talking about is, in fact, AFI's first ever multi-donor collaboration platform. We were encouraged to set up this facility with a very, very generous funding support from the BMZ, the French Agence Française de Développement, but also with the Ministry of Finance of Luxembourg. And I would actually like to start off by saying that the Ministry of Finance of Luxembourg is not represented today. I was in a very good position on Friday last week when I was in Luxembourg to speak with the Honorable Minister Pierre Gramegna, who cannot be with us today, but we are happy to have the representative from the Ministry of Foreign Affairs from Luxembourg with us, Thomas Lammert, who you already met, I think, at the annual general meeting. The important point regarding the MDPRF, as we call it, which is the Multi-Donor Policy Implementation Fund, that is basically looking at in-country implementation on financial inclusion projects in sub-Saharan Africa and in the Arab region. The important point is that the initial idea to set up this facility came from Luxembourg when we spoke about a potential funding. In fact, Luxembourg asked us, why don't you think about a trust fund? And we said, well, we have never thought about it. And then we, I think, engaged in a discussion with other potential partners, particularly Germany, who we already had a long-standing relationship, and with France, which I think had already started to collaborate with us on a smaller project, on a microfinance and digital services project in Africa. Now we're very honored to have in the audience Thomas with us to represent Luxembourg, and we're very grateful for this partnership. Let's have a look now at the MDPRF in further detail and recognize the French Development Agency, who joined us this year as a founding partner. And we have Mr. Bastien Bedossa. He is AFD's Deputy Head of Division, Financial Systems. And we also have in the audience Mrs. Lee Savelin, our focal point, and other AFD colleagues. We are very pleased that you are here. And I think we really value the additional intellectual support that in fact comes from AFD, especially given your expertise in the SME finance sector, but also I think your engagement in green finance and also inclusive green finance. Private sector investment viewpoint is also important to us, and I think your Proparco arm, the investment arm, can also add additional knowledge into AFI's work. We very much appreciate the great recognition that AFI received through the G7 presidency of France, where I think AFD was also very instrumental in recognizing our work. Having said this, I would like to invite Mr. Bedossa, who is now also on the AFI board since yesterday, to say a few words. Bastien, please. You can, wherever you want, you can go.
It works, yeah. Dear distinguished guests, dear AFI team, first of all, I would like to thank AFI and its members for your commitment and daily work to make financial services more accessible to the world's unbanked and poorest populations. The French Development Agency, AFD, feels honored to be a partner of such an initiative. I also have the pleasure to announce that AFD has been approved by AFI members to become a non-voting member of the AFI Board of Directors, as Alfred said, in the upcoming term. Thank you to all of you for that. As you know, France this year holds the presidency of the G7. And as per the fight against inequality at the heart of its work, the joint declaration of the G7 member states comprises strong commitments for women entrepreneurship and better financial inclusion for vulnerable populations. The President Emmanuel Macron announced at this occasion that France will contribute to face this challenge through various vehicles for a total amount of $135 million. AFD Group is obviously fully committed to implement these commitments and transform them into real and effective action on the ground. AFD Group is one of the leading donors operating in the financial inclusion sector in Africa, with close to 50% of our financing being dedicated to the continent and around 100 million euros dedicated each year to support financial inclusion projects. We have close to 30 years of experience in the field of financial inclusions, so we are well aware of what a key enabler it is to reach the SDGs. NDPIF optimizes synergies and supports broader financial inclusion efforts. It allows for regulators and supervisors to access information and adapt quicker to market changes and developments. One of framework's strengths is indeed that it allows for peer-to-peer learning modalities and a demand-driven support with requests coming from those working on the ground. AFD recognizes the value of this approach and expresses strong support to the NDPIF work. As you may know, another area high on our agenda, and the French agenda, is green finance. We are the first 100% Paris Agreement agency, with half of our project being designed to have positive impact on the climate. We have created an approach to accompany financial institutions through our green label SUNREF, which is tailored to country-specific needs and assisting national players to take action against climate change. We also collaborate with the Green Climate Fund to engage in the low carbon transition in the number of countries. Global warming, raising inequalities. What is clear from the G7 summit is that today's financial inclusion challenges are no longer a unique country concern. We have all experienced to what extent these challenges have global consequences and therefore need global solutions. That's why I strongly support the Kigali Statement approved by the AFI member yesterday that remembers us that a common and shared approach is the only way to proceed. I believe the coming 2 days will be the ideal occasion for fruitful knowledge exchanges in order to build these common solutions. I look forward to contributing to these exchanges among members and partners. Thank you very much.
Thank you, Bastien, for this intervention. I think it's now time to recognize Natasha Weinker and the BMZ support. Excuse me. If you have realized, the BMZ is with us for almost a decade. I think particularly in the beginning, we were very much focusing on areas such as SME finance. We also had a support from the BMZ for the small grant program that AFI was entertaining at that time. And I think we also worked very closely together under the G20 GBFI context, which I think was very, very useful for the network. But the BMZ has also made additional efforts to support AFI in the work stream on financial inclusion and forcibly displaced persons. I think that has come out very, very nicely. And now you have joined the Multi-Donor Policy Implementation Fund. So this is quite a track record, I must say, as a funding partner, and we very much appreciate that. And I think it has also a lot to do with the continuity and the ongoing support by Natasha in person, who has been a very, very strong partner. But having said that, as I said, there is also an additional funding support from Germany, which comes from the Ministry for the Environment, which I think has helped to kick us this unique work stream on inclusive green finance. Natasha, the floor is yours.
Thank you very much, Alfred, for your kind words. Honorable governors, deputy governors, AFI members, distinguished guests. As you've heard, AFI is a long-time partner of BMZ, so we have seen the network transition through critically important stages. Like you have mentioned, from an early stage, the AFI was a project that was co-funded by the German government and the Bill and Melinda Gates Foundation and administered by the GIZ to an independent and member-owned and member-driven international organization, and now most recently to a policy leadership alliance that has broadened its mandate to address in its unique capacity key SDG-focused priorities such as climate, gender and youth. Throughout these stages, we, BMZ, have supported AFI in championing many topics like SME finance, capacity building for member institutions, and also women's economic empowerment was very important to us. As has been mentioned, most recently we have committed to become a partner in AFI's new multi-donor policy implementation facility, together with our colleagues from France and Luxembourg. I would really like to congratulate AFI to establish this trust fund, because that makes it possible to efficiently channel the donor funding to support our mutual priorities, which is the focus of the MDPIF, as we call it, is to foster financial inclusion in Africa and the Arab region, and this is also a key priority of Germany's development cooperation and policy. Since we see a stable and inclusive financial system as a key prerequisite for sustainable economic development and as an important means to promote private investment, for example, also in the context of Germany's partnership with Africa, including our commitment to the G20 Compact with Africa. We believe that financial inclusion empowers the vulnerable and excluded groups of the population, and it helps to build up livelihoods and self-reliance and to leave no one behind, as we have heard this morning. Yes, the BMZ and AFI, we have also collaborated closely throughout the years within the G20 context in the Global Partnership for Financial Inclusion. And AFI is always bringing in the voice of its members, mainly the non-G20 countries, and I think you have a very important role to play there as well. As Alfred has mentioned, AFI is now taking forward a global work stream to improve financial inclusion of forcibly displaced persons. This work has been initiated by us during our presidency in 2017, and we will have a panel on that tomorrow. I'm looking very forward to that. I also believe that the financial sector has a very important role to play when it comes in addressing climate change. We have heard that from many speakers before, so I'm actually quite happy that the International Climate Initiative, together funded through our colleagues from the German Ministry for the Environment, is supporting AFI in that important work as well. So we are delighted to see the important progress being made in our shared areas of priority, and we're looking forward to the upcoming discussions at the GPF, which will highlight these advancements and innovations. BMZ is also very pleased to see that AFI is continuing to diversify and expand its partnerships, which expand opportunities for intellectual exchange and learning by all involved. I think this is a strength of AFI, that it enables many partners to exchange on a mutual level. So you're a key partner for BMZ in our work to support financial inclusion globally. I would also like to use this opportunity to thank AFI, the team, and also the AFI members for this trusting and insightful partnership over the years. I'm very much looking forward to continuing our mutual work to promote financial inclusion for all. Thank you.
Thank you very much. Thank you very much. Well, Diffit from United Kingdom, Honorable High Commissioner. I would like, first of all, to say that we have been looking at Diffit for quite a long time. When you follow the developments in the financial inclusion space, you cannot ignore what you have been doing, and I think many of us have always seen Diffit as a smart leader within the financial inclusion space. I think it goes back to times when you worked in Kenya with M-Pesa, the financial development trusts. Work goes back to FinScope. You know, there are so many things that you actually have initiated. So we have been looking at Diffit for quite some time, and we're very happy to see that finally we also could conclude a partnership with you, which we believe is going to continue to evolve and to expand. And just for the information of the members, we are going to focus together on the DFS Champions Initiative, which I think is very much reflecting where Diffit also conceptually is very strong at. And this actually connection goes back to a meeting that I had with Becky Wycorn, who was also in the audience, at a G20 meeting in Saudi Arabia last year, where we've started to have a conversation around the potential collaboration, and then things actually went very fast. So I would like to invite Her Excellency Joe Lomas, the British High Commissioner to Rwanda and non-resident ambassador to Burundi, to this floor. Thank you so much.
Ministers, governors, deputy governors, ladies and gentlemen, good afternoon, I think it is now. Thank you very much to AFI and to the government of Rwanda for hosting us here today in this fantastic conference centre. It's great to see such a diverse membership of the financial inclusion community all together in Kigali. Now, the UK has long been committed to the global financial inclusion agenda. Like our other partners here today, the UK views access to suitable finance as an enabler to achieving the Sustainable Development Goals. We recognise that when individuals have access to formal finance, this enables them to participate in the mainstream economy, to access basic services, to invest in their futures, and to build resilience to withstand shocks. Now, during the previous session, we heard about Rwanda's very impressive financial inclusion journey, and the UK government is very proud to have supported this journey through our Access to Finance Rwanda programme since 2010. We look forward to continuing our work together and exploring also how we can harness the expertise of the City of London towards financial sector development in Rwanda. Embracing digital innovation is at the heart of the UK's approach to financial inclusion. As the Chair just mentioned, in Kenya, the UK supported the launch of M-Pesa in partnership with Vodafone, and it's really driven the mobile money revolution there. And we want to apply that same innovative attitude to find solutions elsewhere. To date, we've committed more than £100 million in funding to support developing countries' transition towards secure, suitable, and inclusive digital finance. And that's why today, I'm delighted to be here to officially launch this exciting new initiative in partnership with AFI, the Digital Finance Champions Group. Now, this is a member-led group. It was born out of a Commonwealth initiative at the Commonwealth Heads of Government meeting in London in 2018. And it recognised that countries from across the Commonwealth, and indeed across the world, who are at various stages of digital transition, have their own knowledge and experience of which models work well and which do not. And we wanted to find a suitable mechanism to leverage this real diversity of experience, to highlight digital financial services policy innovation, to facilitate peer learning, to inform policy design and expedite the implementation of secure and inclusive digital financial strategies. And by partnering with AFI, we're delighted to see the geographical scope of the group grow to include a wider range of countries and so a wider range of experience. All participants benefit from this learning because the opportunities and challenges are significant. And frankly, given the rapid rate of technological innovation, we all need to help each other stay ahead of the game. As we've heard already today, technology and innovation are major priorities for Rwanda, and these are going to feature heavily in next year's Commonwealth Heads of Government meeting here in Kigali, in this great centre. We're very excited about this. And the work by the Digital Finance Champions Group is going to contribute to the Commonwealth's goal of building a vibrant innovation ecosystem. We're particularly pleased to be launching this initiative here in Rwanda because Rwanda is a founding member of the Digital Finance Champions Group and was integral in shaping the initial priorities. Rwanda is a true champion of digital innovation and applications, and the country has a rich set of experience to share. To conclude, ladies and gentlemen, I'm really proud that the UK is a key player in improving the environment for digital finance internationally. We've all seen firsthand the impact technological innovation can have, and we're committed to ensuring the best value and impact from development in a digital world. The UK has knowledge to share. We've pioneered initiatives like open banking and developed a range of regulatory tools that enable an innovative and secure fintech industry to flourish. We've also got much to learn. It's together we can drive real and inclusive change. Thank you.
Thank you. Thank you very much. Commissioner. Sweden is acknowledged, I think we all know that, by the international community as being one of the champions in advancing women's empowerment. And the multi-partnership with CEDA that we were able to conclude is in fact instrumental in helping AFI members to implement it in our action plan and to get underway the work stream that we have now termed Gender Inclusive Finance. Now, this Gender Inclusive Finance, or in short GIF, is a cross-cutting theme that strongly connects with all the AFI work streams. That means whenever we go, for example, for capacity building or joint learning programs, we try to identify how can we, in fact, support all these activities with a gender dimension that will, help us to implement the NRO action plan. And of course, we are also happy to report that we already have more than 30 Maya commitments that are addressing closing down the gender gap and even other gender-related objectives. Now, we are very pleased to have here the Swedish delegation with us today. Mr. Ola Salen from the Swedish CEDA is also with us in the room. But I'm very pleased to invite Mrs. Kristina Vedekul, the Honorable Head of Mission for the Embassy of Sweden to Rwanda. Ms. Vedekul, please.
Your Excellencies, Honorable Ministers, Governors and Deputy Governors, distinguished guests, colleagues and friends, all protocols observed. It is really a pleasure to be here and to see that so many have been able to join us for this important forum here in Kigali to discuss how we can harness technology to increase financial inclusion of women and youth. I am humbled and honored by this opportunity to address you today to speak about a topic which is a priority for Sweden and which is very close to my heart: gender equality, economic empowerment of women, and our common sustainable development goals. Sweden's firm commitment to gender equality and the economic empowerment of women and girls has a long history and has been the core of our development cooperation for years. But 4 years ago was a milestone when the government of Sweden was the first country in the world to adopt a feminist foreign policy. When announced, the concept stirred up a lot of emotions and was at a time met with very mixed reactions. But like Mahatma Gandhi says, and our foreign ministry often quotes, first they ignore you, then they laugh at you, then they fight you, and then you win. Today, the importance of gender equality is increasingly recognized and embraced, and many has expressed support for Sweden's very firm and vocal stance on this issue. Sweden's feminist foreign policy rests on the 3 R's: access to resources, strengthen rights, and increased representations for women and girls everywhere. A feminist foreign policy means that we broaden our work with human rights and gender equality, so it's included in all spheres of the foreign policy issues, of our foreign policy agenda. We systematically analyze all foreign policy issues from a gender perspective, and we mobilize the entire foreign service in support of this policy. For Sweden, gender equality and the empowerment of women and girls is fundamental. The discrimination of women and girls in political, social, and economic spheres means that they, to this date, do not fully enjoy their human rights. This needs to change for women and girls to be on equal footing and fully realize their potential. Removing gender inequalities and advancing women's economic empowerment is also fundamental to achieving many of our common sustainable development goals and our joint commitments under Agenda 2030 to ensure that no one is left behind. We know that increasing women's participation in economic activities and increasing their access to productive resources, including finance, not only has a transformative impact on their lives, but also the well-being of their families and their communities. Households where women are economically active have increased nutritional intakes, incomes to cover school fees for the children, and improve economic resilience to withstand shocks. It is with great pleasure that we have found a correspondent interest and ambition with AFI manifested in the General Action Plan on Gender and Women's Financial Inclusion, which Sweden has been proud to support since 2018. The number of members to have been made specific Maya declarations on gender equality has passed 30, and we are confident that more will be added. The highly ambitious objective to halve the financial inclusion gender gap in the participating country by the end of 2022 will have tremendous impacts for millions of women and girls, many of them previously unserved by the financial sector. And we are very encouraged by the efforts of numerous members of AFI to design and implement gender-inclusive finance policies and regulations, which include priorities such as leveraging of emerging digital technologies to reach women, collecting of gender disaggregated data, greater inclusion of female-led stakeholders in national dialogues on financial inclusion, and support to women-owned and women-managed small and medium enterprises. And we would like to encourage AFI to continue to explore new and innovative ideas, strategic partnerships and opportunities that will enable us to reach women and girls that are today furthest from the financial market. Working for gender equality and women's economic empowerment is also a priority for Sweden here in Rwanda. As many of you know, Rwanda has come a long way on gender equality and women's political participation, scoring very high on the global gender rankings, which speaks to the country's commitments and achievement. Yet, barriers to women's economic empowerment and financial inclusion persist. Together with the Rwanda government, Access to Finance Rwanda, and other local partners, Sweden will continue to work for the financial inclusion of Rwandan women and girls. And I would like to end by emphasizing that the transformative impact of gender equality and women's economic empowerment is a call for action for all of us. I hope that this forum will provide inspiration, ideas, and concrete recommendations to help us make leaps forward so financial inclusion for women and girls really become a reality. Thank you so much for your attention.
Thank you very much, Honorable Head of Mission. Please have your seat. I would like to thank you on behalf of AFI as an organization, including our board, for all your support. And of course, we are looking forward to starting and to continuing very fruitful cooperations. Now, please keep your seat while I'm inviting Deputy Governor Lobna Elal from the Central Bank of Egypt, who is representing the chair of the AFI board, to close this ceremony. Deputy Governor, please.
Good afternoon, esteemed guests, ladies and gentlemen. Here I am again talking to you. But I think that maybe I disagree with Alfred this time. I want to talk in my personal capacity, not just as the chair of, as Egypt being the chair of the AFI board. And the reason I'm doing this is that I personally have witnessed the development and maturity of AFI organization since it was just an idea in Alfred's head. I remember back in 2007, we met in my office at the Central Bank of Egypt, and Alfred was just presenting and discussing with me his ideas and aspirations of having an alliance institution, the name wasn't developed then, for focusing just on financial inclusion. And I still remember my response to him was, that would be music to my ears. And today, 12 years later, as we stand today, and I've seen the organization develop throughout those 12 years, I think I'm very happy, personally, very proud, and I think all of us as member countries should be proud of where AFI stands today. When I look at the different spectrum of donors that are now financing or partners with us at AFI for our development or our financial inclusion agenda, first I would like to thank the ones that believed at the very beginning, the co-founders, the GIZ and the Bill and Melinda Gates Foundation, for taking us for the first few years until we were able to develop into 2016 into a member-driven organization. But the wide spectrum of donors that we see today and the presentations that were done today by our new, not all new because some of you have been already with us for so many years, is, I think is a testimony of two things. One thing is that AFI, and this goes back to our members and with the guidance of the management unit, was able to position itself as an important entity when it comes to financial inclusion, so that developmental partners can see the collab between their agenda and our agenda. But it also puts a very important point in place, and I will take this also, and as I totally agree with His Excellency, the Governor of National Bank of Rwanda, and that is that any entity, when we have such a diverse agenda, we have to be focused on what we want, so that when we attract donors and partners to work with us, it is our agenda. And here I also urge the members of AFI Alliance and the network that we should continue this focus through the management unit, so that we don't, the topic is big and every day we have new things added to it, but the focus and knowing exactly where we want to go, knowing the DNA of the Alliance will help us into actually maximizing the use of the collaboration and partnership with different donors and collaborators, and that there is no repetition, there is no overlap, there is always a better use of all our resources and our capacities within the organization, and also the experience we get, not just the money from our donor institution. So I'm talking in my personal capacity, but I'm really very proud and happy to see this. And maybe I would like to end up with this, especially after what we've heard, because most of the initiatives that are going to be worked on in the next few years are really quite tailored. It's a matrix of products and also regions, is that maybe we should always keep in mind the logo that was said of no one left behind, that this should be our motto going forward. Thank you very much, and congratulations to the AFI management and to the network on this, I think, a milestone development for the AFI Alliance.
We're now going to go for our breakout session, and I would like us to give another round of applause to the panelists. As they're going back to their seats, I would like to give you an overview of the breakout sessions and the rooms where they're going to be in. The first breakout session is going to be in room MH4, and it will be discussing on regulatory frameworks that harness the potential of digital platforms and fintech ecosystems. It's going to be in room MH4. The next breakout session is going to be in delivering digital and financial capabilities for women and the youth. It's going to be in AD12. And the next session is going to be focusing on addressing the financial needs of women in the age of innovation, the role of customer-centric data. It's going to be in AD10. After the breakout sessions, everyone is going to go for their lunch. We're going to have our lunch in room MH1, 2, and 3. After our lunch, we are all convening back here with our special guest speaker who is going to come to speak us in a power plenary session titled Technology is the Key to Youth Financial Inclusion. Thank you so much.